Officially start. So there we go. Good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome to Trading Coach's Playbook, or our little get together on Fridays. So there you go. Good morning, Stephen. Good morning, Brenda. Good morning, Helen. Good morning, everyone who's joined us today. And yeah, as it shows, my name is Brandon Wendell, and I'll be guiding you through this workshop today. And before we get started, we are not registered broker dealers or investment advisors. Looking at this information from an educational standpoint only. I'm not telling you to buy, sell, or hold any particular securities or giving any personalized recommendation. There's always risk of loss in the markets. No matter what we do, we can never eliminate the risk. You just try to manage it. And we're not subject to trading restrictions here. We could have position as security initiate one at any time. So moving forward here, oops, let's see, didn't go. You can join us for a lot of these different workshops. You can see the free online workshops. We do Power Hour every Monday from noon to 1. We do the Trading Coaches Playbook every Friday. I rotate every 3 weeks for my participation on that, but there's some great information in the meantime. You also got one coming up, your winning trading formula. So got to check that out in August. There's also premium things that I do, as well as other people here at Wealth Builders HQ. I'm going to talk a little bit about some of the programs that I run. One of the main ones is Wealth with Spreads that I'll talk about today a little bit. And okay, sorry, I was just checking a message. Anyway, let's see what else we got. Oh, you know what? There's some cool stuff coming up. I just want to let everybody know that I'm doing. Well, this is what I normally do. That's the E-mini Think Tank that you can subscribe to. But I also have a live event that's coming up as well. I'm not sure if I have a slide for that one. But in October, I can't remember the exact date now. I have to look it up. But you can contact support and find out more about the live trading day. You can basically hang out with me for a full day and learn pretty much what I do for the trading routine. It's a 1 day in the life of a trader. And that's coming up in October in New York. So anyway, that all being said, today we're going to talk a little bit about seasonality and sector rotation and how we can use that as an opportunity to find trades and manage our positions in the markets. People don't always realize this, but, kind of like the calendar has seasons that we go through, spring, summer, fall, and winter, securities go through them as well. Now, they're not always tied to the calendar. But, when it comes to the stock market, for instance, let me clean up my chart here. But for instance, when it comes to the stock market, you might have heard sayings in the past, sell in May and go away. Or you've heard, the Santa Claus rally. That's another example of a seasonal play. Or, when you're trying to take a look at what are the worst historical months in the market, September is usually the worst performing market month, while the best 3 performing market months are November, December, January. And the reason why is some of it's self-perpetuating. If people believe that there's going to be a Santa Claus rally and they hear enough about it, they're going to buy in, and that's going to cause momentum to shift in that direction. But a lot of it is just because of the mechanics and some of the fundamentals that happen behind the markets. So by understanding those, you can get like an odds enhancer. Now, you got to be careful, because this sector rotation and the seasonality, those are 2 separate things, by the way. Okay. But those things are kind of like odds enhancers. You should never make your only decisions based on that. They're there to help you identify what to invest in and possibly when. So first, I'll probably talk about seasonality. And again, seasonality is kind of the shifts, or I should say, regularly occurring movements or patterns in price action. As I spell things incorrectly there. All right, so we get these regular occurring patterns that happen in price over and over and over again. I said, Santa Claus rally, sell in May and go away. We're looking at things like gold. There's certain seasons that gold performs well. So you've got, when it comes to these seasons, you typically have spring, which is a beginning of the uptrend. Then you get summer, which is the full-blown uptrend. And then you get the autumn or fall, And that's going to be the halt of the up move and the start of the decline. And then fix that. There we go. Winter is the bear market. And like I said, there's different reasons for each of these and different calendar times for all those as well. Now, what I'll also discuss in this little workshop here is sector rotation. And sector rotation really only applies to the stock market. And basically what happens is the stock market leads the economy. And really, when you think about it, that makes sense, because what's happening is we are trading in anticipation of what the economy is going to do in the future. So there's usually a lag of anywhere from 3 to 6 months between stock market sector rotation and the economy. And that can be used, again, knowing what the rotation is going to go into, you can get a precursor as to what to invest in, or know how to protect your money and move out of sectors that might be out of favor. So basically what will happen in sector rotation is certain sectors perform better during certain market conditions and also economic conditions. We say economic status, we go through, let me fix that a little bit so we can see this better. I'll do, oops. There we go. Now we can read all that. So if you want to take a screenshot, go for it. Anyway, like I said, sector rotation kind of gives you an idea of which markets are going to be best performing and when. And like I said, that can give you an opportunity to buy into those better performing markets before they actually start performing, or move your money out of markets that or sectors that are likely to underperform or decline very quickly. It's always good to be proactive rather than reactive. When we're reactive, we're acting upon something that's already been happening in the markets, and we're slow. We're not going to get the best prices. And often we're giving up a little bit of profits before we actually, protect our money or actually make money. When we're proactive, we're stepping in front and acting before the move happens. So that way we're able to take advantage and actually buy the lows and sell the highs. And that's really what we're trying to do, is maximize our potential profits while minimizing the amount of risk that we face in the markets. And by having this extra knowledge, it can help you. So one of the big drawbacks when it comes to seasonality is it's not free. You typically got to pay for it. When it comes to seasonality, it can be used for pretty much everything. Every single thing you trade goes through seasonality, and I'll show you some of those. But part of it is you got to decide for yourself. Number one, is this important enough to you to affect your type of trading that you do, and should you be paying attention to it? The reason why is you got to justify the cost. I have 3 different websites I typically use for seasonality, and I'm sure there's many more out there, but I've not found any high quality free websites. Some of them that have some free data are very, very not as detailed, let's put it that way. They're very generalized, so it doesn't give us as good trading information. You get what you pay for, right? So the other thing you got to figure out is, do you want to go through the time dissecting that information and figuring out how it should affect your trades, or would you rather have somebody who knows what they're doing interpret that information for you and then tell you what's likely to perform? And that's kind of where I come in. I mentioned that I had that program called Wealth with Spreads. And actually, I forgot to log into my program here. I should do that real quick. I was working on the video for this morning, actually. I got to log out first before I can log back in. But if you're interested in joining me in the Wealth with Spreads program, there should be a link up there. Yep, there it is. And basically what I do is every week, I identify high quality opportunities, high probability opportunities. And I produce a video that goes out on Saturday or Sunday. I produce it usually on Fridays. And here it is. It's filled with high quality opportunities. So what happens is with the Wealth with Spreads program, basically, before you learn, or before you know or take the trades, you got to learn how to do the trades. So right here, I have educational videos, and there's self-paced education with documentation that supports it to help teach you how to use this material and execute the trade ideas. And then, as I mentioned, there's a video that I produce every week. And what I do there in the video, you can see this is last week's video, and I'm producing this week's. I even put out a PDF to use for the students to reference. So I got the trade ideas for the week, even the margins that are required. You know, right here, that was live cattle for $412, nat gas for $248. You see the margins are very low when you deal with spreads. Spreads are a great way to take advantage of seasonal trading, but it's not the only way. And I dissect the trade. I go through the reason why you'd want to do it. I mean, this one, for instance, this is the 10-year versus the 30-year treasuries. You can see those trades have worked for the last 15 years without fail. I mean, that's the nice thing about combining seasonality with spreads, is that you have an extremely high probability, 100% over the last 15 years. Of course, this year will probably be the one that loses, right? Because I'm getting in. No, just kidding. It always seems that way. Anyway, I go through why you'd want to take the trade. I even show you the charts of where to buy and how to execute the position, and even go through all the information, the average rate of return, where to place the stop loss, and how to place the order based on the platforms that we're using. Sometimes we have to do market orders. Other times we can do set and forget type of orders right here. So again, that's one way of taking advantage of it. So the Wealth with Spreads program is pretty intense. There's a lot of great information on it. And what happens then after those trades are put out there, I don't just let you try to, figure it out on your own. I actually send out text messages. And you can see you can opt in for the text messages, but I put out texts whenever the trades are coming into entry, or warning you when you should not be taking a trade. For instance, this trade was saying, do not enter right now. This was today. The reason why is we were not in the right area. So even though the trade idea was telling you to possibly enter, what was that? It's, soybeans versus wheat. I go to my trade ideas here, and you can see there it is, soy versus wheat on the long side. It was the third one down. There it is. And it was saying we were supposed to get in on the 19th of August, but it was not in the right position based on the chart. So we want to wait until we get the right position. So I kind of hand feed you trade ideas and walk you through the ideas. I don't just leave you abandoned saying, okay, what am I supposed to do now? You get, step-by-step instructions as it's happening. So it's kind of neat to be able to learn that and how it goes. But anyway, getting back to the root of all this, the reason why these work is there's a seasonal pattern to pretty much every security out there. If I go into, this is MRCI. And as I mentioned, there's a cost for each of these websites. I don't care if you want to subscribe or not. For MRCI, if you wanted to, let me show you, if you go to the subscriptions, there is right here, you go to MRCI online subscription. You can see it's $379 for 1 year. Well, that might not be worth it for you if you're not using this. This is not usable for day traders. Okay, seasonality is for swing trading and investing. Okay, so most people, even if they're day traders, still invest to a certain amount. So, probably available for everybody. If you wanted to get a discount, all you have to do is you type in my name. This is for MRCI. The discount code for 10% off is the word wealth and my name. So I just put that in the chat. So if you go to mrci.com and you want to subscribe, you click on that buy now, it'll ask you to log in, check out, and it'll ask how'd you hear about us. If you put in that word wealth in my name, you'll get a 10% discount. So it makes it $341 a year if you're interested. And if you're not interested, then don't do it. Again, it's only going to be usable if you actually need this information. If not, don't spend the money on it. Okay. Oh, cool. Oh, sorry about that. Hold on 1 second. Sorry about that, everybody. My wife was just giving me some good news. Anyway, so moving along here, we go to future seasonal patterns. And let me show you why this could be so effective. A couple reasons. I've already kind of showed you the high probability trade opportunities, right? So let's say we want to go to the indices here, and we're going to look at that S&P 500 index. We look at the index, or let's say we want to trade that individual futures. Brenda says hello. She's one of my students. She says hello. Anyway, and Lucy's sitting right down next to me too, sleeping. But anyway, so right here, you can see the historical pattern. If I want to know what's likely to happen during this period of time, or when's the best time to invest in the S&P, this can give me an idea as to when to do it. You can see right now in mid-August, what happens with the S&P over the last 25 years, sometimes it does 30, sometimes less. You can see that the markets have usually risen until about yesterday, and then they start dropping. Okay, so let's see, wait a minute, hold on here. We've got the 12th of August to the 18th, and then from the 18th and the end of August, we drop. Well, let's take a look at the S&P here, and I'll go out to a daily time frame, and we got to move that chat here a little bit, but take a look from the 12th of August. Actually, it happened a little early. Look at that, the 10th, but even the 12th, if you bought in on the 12th, the market rallied, and now there it is, the 18th, you're supposed to be getting out, right? Let's go to a 240. Oops, I did the wrong keystroke here. Do I prefer MRCI over CME to front month volume? Actually, I don't use either of those. I'll show you what I do use in a moment. So right here, you can see at the beginning of the 12th, look at what happened. The market started to rally. That's the seasonal pattern. And getting out before the 18th, look what happens. The markets are dropping now. So is this truthful? It's going to work, except when it doesn't. So there's a high probability of what's going on there. For instance, back here, July 14th, from July 14th to August 12th, the markets are usually in a bit of a decline. Well, you go, whoops, wrong page. Go back. July, well, this year is actually wrong. So again, it's not perfect, but historically, you can see when the markets move in one direction or the other. You can also type in, last 5 or 15 years to see if there's a shift. And there was. In the last 5 years, you could see in July, actually from June 27th to the July 26th, all the way actually really till beginning of September, the markets have been somewhat bullish. So there's been a shift in the last 5 years compared to the last 15. So you can learn more about patterns. Now, to answer the question that Paul just has, a great question. To figure out the front month contract and the one you should be trading, I actually use bar chart. It's free, first of all. But if I want to know what I'm supposed to be trading, you just go to barchart.com, futures market overview. And it will show you, I can go to the full list. And we're looking at indices, so we can do that. It'll show you the different contracts, but it'll show you which one has the most volume, and that's the one you want to trade. And that's beneficial when I go to grains or even crude oil. We just had a rollover early, but you can see right there, the front month for corn is December, not September. So bar chart is really easy to use. Again, you just go to that. Well, we go futures market overview. That's all you got to do. And I'll show you the front month. So that's the one I use. So anyway, getting back to seasonality, like I said, there's patterns that happen over and over and over again. So that's one website I use. I also use this website that's actually a little bit more precise. MRCI is good. And the other nice thing about it, if I go back to MRCI online, another thing they do is they find trade ideas for you, or, right here, trade outlook. They give an overall overview of what's likely to happen in the markets for the next month. I get this every month. Yes, there are expiration dates on bar chart as well. I just closed that out. But if you go to contract specifications, or not even there, let me go back to bar chart. Futures, of course. Oops, futures. Right there, contract futures expirations. Okay, so that's there. Also, since you're one of my students in the E-mini think tank, I also have it listed there in E-mini think tank. I have all the expirations. There's a document for it. So you can go there too. And I got it from this, but I typed them all up. So yeah, if I were to go back, hey, did I close out my, oh, dummy. Why did I close that out? See if I'm still logged in or not. Okay. Clicking on, going. Nope. Yeah, I hate when it does this. Oh well, it's a technology. We're gonna do. I gotta log out, log back in again. But anyway, where was I here? With the trade outlook, then give you an idea of what to expect. So right here, viewed through the lens of long-term charts, stocks have historically been in a bull market punctuated by a few sharp corrections, at least until this year. And they kind of give you an idea of what to expect. September futures traded for expiry, December futures rallied in the third Friday of the month. So they're telling you what to expect in each of the different sectors, just an overview of what's going on in the markets. We take a look at the Canadian economy driven by resource exports that drives demand for Canadian dollars. But as autumn arrives, those exports slow, and you might see a little bit of a drop in the Canadian dollar. So they give you an idea of what to be expecting. This is kind of like fundamental analysis. With fundamental analysis, that gives you an idea of what to expect, and almost like the weather report. It doesn't tell you the exact timing when the rain's going to start, but it prepares you to know there might be rain today, so you can carry an umbrella and be prepared. Okay. Anyway, I was going to click right here on E-mini Think Tank just to show you real quick. If you go into documents, I think it's under fundamentals. Yep. Futures expirations right there. You just have to download the document, but there's a document there, futures expirations. So they'll tell you all of them and when to roll over too. I have that listed too. So anyway, getting back to this with the MRCI, one of the other things that I can do, I can go through right here in future seasonal patterns and try to find my own trades. For instance, if I'm going to trade corn, I can click on the future seasonal patterns. I can go to corn, and I can look at the cash market, or I can look at the December contract, since we know that's the front month. And I can look to see coming up this week, here I am on Friday, maybe I'm getting ready to prepare for Sunday's open for the following week. What are we going to trade and how are we going to trade it? By the way, right here, you see that shows last trading day and first notice dates for the contracts. That's kind of nice. But anyway, getting back to where we are now, and we'll zoom in a little more. Looks as though corn is in a bit of a decline right now, seasonally. So we go to today's date, the 19th, and I can see over the last 5 years, there's been a sharp decline in corn until the 23rd. Okay, that's what, Monday, Tuesday. No, I think, what day is it? Wednesday? I'm just guessing. No, it's Tuesday. I was right. So up until Tuesday, we're likely to decline. So we might have some shorting opportunities for the first, Sunday, Monday, and Tuesday. And then it's likely to be a little bit choppy, although the last 15 and even 30 years has been somewhat bearish. So if I go back to my corn charts now, and it doesn't matter what time frame I'm looking at, here I am on a 4-hour chart. Well, it does actually matter because it's not for day trading, but for a swing trade right now, as we're coming into supply, I've got a higher probability of making profits if I short the supply. Because first of all, momentum is not there to break through. Secondly, we know seasonally this should be a bearish time of year, and I've got an opportunity now potentially to short corn. And I'm not saying to do this, okay, just this quick analysis, but potentially corn should drop to my next demand zone there. So this could be a good shorting opportunity today going into Tuesday. And if it doesn't hit by Tuesday, then I might know that I need to get out because seasonally the window is now shut. We're not going to get as much bearish activity potentially. And I could also take a look at the daily time frame. And you can see on the daily, we had a little bit of a rally, but it's pretty weak. Couldn't get into bullish territory, might be ready to fall. So that is a way of using the seasonal information to affect trading. I can look to see what does my window look like, and should I be going long, should I be going short, what should I be doing here? Now, to get a little more precise, unfortunately, this is not, it's a good site, don't get me wrong, but it's not necessarily the best. They do have some good info. Like I said, if I go back to the homepage here, they actually pick out certain trades. I'll go to previous. It's not fair for me to give you the updated ones, although they do a 2-week free trial. So that's not a big deal, but I can go back to July's trades, and right there, seasonal trades for July. every month they give me 15 trading ideas. And first of all, when you take a look at the probabilities, it's pretty impressive. Right there, you see 87%, 100% over the last 15 years. So the worst you get is 80%. But basically, they come up with a bunch of ideas for you to possibly take. So for instance, copper, I click on that one. NASDAQ seasonality, yeah, I'll look at that one next, sure. So going into the trade idea, this is what they show you. The last 15 years, how did it perform? They're telling you, you buy copper approximately July 6th, get out of it on the 31st. And this is how it performed. Now, I can't blindly take the trades. Okay, here's why. When you take a look at this, you can get in a lot of trouble just blindly taking the seasonal trades. This one looks pretty good. You made $5,700, but at one point you were down $1,200. Okay, and even worse, this one made $187, so it was just barely profitable, but it was down $3,200 at one time. You do not want to sit through those drawdowns just to make a little bit of money. You know, you'd be sitting there, please come back, please come back, please come back. It's not worth it. So I combine this with technical analysis to let me know exactly when to enter and exit. I always trust the charts. Okay, seasonality, this is something that's followed, by the way, by the big institutions. They actually do watch this stuff. So as I was saying, this is kind of cool where they give me some trade ideas. But one of the things I can also do is I've got another subscription here called Seasonality. And this is a little more expensive. And if you're interested in joining them, you can go ahead and use this link if you're interested. Copy this and paste. There you go. And if you use this code, CMT30, I think it's that. It's either CMT30 or CMT-30. I can't remember which one it is. But one of those two codes will give you 30% off, just so you know. Anyway, this is a little bit more precise. So right now, what I can do is type in, for instance, NASDAQ, or actually it's already here. If I go to popular instruments, NASDAQ 100, right there. Oops, let's turn the vibrate off my phone. Sorry about that. All my messages going through here. Anyway, what happens now is if I want to know specifically what's normal for this time of year, I can look to see, okay, last 15 years. I typically want to check about 15 years. So I go to today's date, left click on it, and I can hold and go to Friday the 26th. And now what it's doing is showing me what's happened over the last 15 years. Seasonally, 60% of the time, the market went up. Okay, so it's not the best time to invest in the NASDAQ necessarily. You see that the average return, I'll zoom in over there, the average return is 0.79%. So a little under 1% rate of return. 60% is not great. I want higher probabilities, 80% or better, really. So you can see the annualized return too. That's not 50% return you're going to get. That's the annualized return based on the 1 week at 0.79%. Okay, just keep that in mind. So they had 9 gains, 6 losses. Current streak is only 2 gains. You can see 20 and 21 was up. So this is not a good time to trade the NASDAQ necessarily. And you could do the same thing, like I said, with MRCI. If I go back again to MRCI online and go to future seasonal patterns, go to the NASDAQ under indices, and we can go to the current contract as well. It'll show us what normally happens, but we already kind of know. But this is not as easy to narrow it down. So I zoom back out. You know, even if I zoom in, August, again, right here, August 18th, 19th. Well, in the last 30 years, we're a bit choppy, as you can see right there. Last 15 years, still somewhat choppy. So it's not necessarily the best week to get into the markets. However, next week, well, maybe 23rd or so, it looks like from the 23rd to the end of the month, looks pretty bullish, doesn't it? Let's check out Seasonality again. If I go from the 23rd to the end of the month, in September, now we've gone up to 73%, and the average returns of 1.5%, just a little under that. So it may be beneficial to time the entry a little bit better. Again, with MRCI, I had to kind of scope it out and see where were we bottoming out. right in here, last 5 and 15 years on the 23rd and peaking on September 1st. That's the last 5. Last 30 wasn't quite as good, but again, in the last 15 years, according to Seasonality, 23rd, you see we have 73% winners. We can go to the last 5 years to see if anything's changed. And actually, the last 5 years, it's been 100%. There's been almost 3% rate of return in the last 5 years if you bought on August 23rd, got out on September 1st. Pretty good odds, right? So that's what we're doing with seasonalities. We're trying to increase our odds for success by finding the windows where markets typically move in a certain direction. That's pretty neat, isn't it? So I can do it either way. I could just look here and try to find the areas that are moving up or down. If I'm looking for shorting the NASDAQ, it looks like September 1st to the 8th was a pretty good shorting opportunity in the last 5 years. Well, again, I could verify that using this other site. We go September 1st to the 8th. And it shows 40% winner. That means 60% of the time it went down, average return about 2.25%. So yeah, there I can narrow it down to find windows. Or here's the other thing. I'm looking at specific securities. What if I don't know what to trade yet? And I wanted to see what might be moving. Well, I can go into my screener here on Seasonax, and we can go to commodities or indices, whatever you want. Okay, so commodities, let's say now today we're not taking, well, yeah, we can do today, or we can do next week. Doesn't matter. But for the last 15 years, there we go. Let's say we only want to hold from 5 to 30 days. We want to do short-term swings, and I only want trades that worked out 80% or better. We have gasoline and petroleum. Gasoline has an 80% win rate. And it right here, August 19th through the 28th, 80% of the time, there's been a nice increase in price. Average return, 1.86%. Pretty cool. I can narrow it down and find trade opportunities. Now, the neat thing is, this is really designed for stocks, not necessarily commodities, or, but it does have currencies as well. You know, I had commodities. If I wanted longer term trades, by the way, let's say I want to up to 3 months. Nope, nothing there. 31 to 60 days, nothing there either. And I can also look for shorting. Nope, nothing. Okay, no big deal. So let's go to currencies. If you're a Forex trader, can do the same thing. Last 15 years, 80%. Oh, wow, we got quite a few. Let's go higher. Let's go 85%. Creme de la creme. There we go. We got 200%ers. I don't know if I'm going to trade those. What's that? Indian rupee versus Canadian dollar. It's a weird pair. Not sure what that's all about. IDR thing. But anyway, I can look for the more common ones. This is US dollar versus Chinese renminbi. 87% of the time, it declines between August 19th and November 6th. You can see it, it's only gone up 13% of the time. So 87% of the time it's dropped. That's pretty good odds. It's not a huge gain, but it's at least close to 1% for that move to the downside. So I could search for different securities by using the screener. Now, if you're a stock trader, here I can actually narrow it down by, okay, indices, the S&P 500, NASDAQ. Let's do NASDAQ. Inside the NASDAQ, over the last 15 years, we're going to look for short-term trades, 5 to 30 days, any longs that we might have with 85% win rate or better. And there it is. It's all there for me. We got Marriott, NVIDIA, Costco. So I can find trading opportunities. My video that I put out every week, if you want to learn more about this, I do talk about this in that video called the Wendell Effect. It's on YouTube and it's absolutely free. But if you go there, I'll show you real quick. Just got to search for it if you want. There it is, Wendell Effect. And there it is. Last week's video. Kind of cool opening there. But it's just me talking about the markets, and I go into, oh, there it is, sector rotation. What's going to happen there? We're going to talk about sector rotation. Then I go into the sectors and find opportunities. So this was on the consumer discretionaries. And then I found individual trade ideas right there. Look familiar? Carnival Corporation using Seasonality, high probability trade opportunity. And that's what we look for. I'm going to listen to my voice there. But anyway, so you can see that pretty much on a weekly basis being applied if you want to learn more about it. So, let's see how that one go. Is it Carnival Cruise Lines? Carnival Corporation. Yeah, we never broke out of the range. So I had to break out of the range, just didn't do it. So that trade didn't happen. Costco was a great one. That was a seasonal play. And you can see there's the entry, there's the target. It just made it all the way up there. So that was a long trade based on seasonality. The entry was somewhere in June with the target being hit in August. So if I go back to my Seasonax, go to Costco. I don't remember exactly when I found it, but I think it was beginning of June or mid-June. Let's see, when was that one? Yeah, end of June, actually. So it would have been right around the 23rd or 25th. So what was that here? There it is. You can see at the end of June, right there was high probability for it to go up, 90% winner. So what did I do? Basically, was able to pick the bottom and called out the long trade right there in that video. So there's a lot to the seasonality. It can work very, very well for you if you know how to apply it. I can even go into, if I go right here, not there, screener, I can actually analyze by sectors. And that brings me to the second part of what I want to talk about today. We know seasonality means that certain stocks are going to perform well in certain times of the year. Certain securities in general perform well during certain times of the year. And our job is to find the best time to buy or the best time to short those securities. Well, seasonality can point out what and when. Now, another piece that helps us identify what to invest in, and I'm going to go here, stockcharts.com. And let's see here. So I was checking something real quick. Okay. So if I go into charts and tools, performance charts, there's a predefined area right here, sector ETFs. So I use that. And looking at the sector ETFs on this page, I'll just give you the link for the page if you're interested. It's free, of course. Try to use free resources when I can. But at the bottom right here, you can see sector rotation model. Now, this is kind of what I was talking about. The orange is the stock market, while the blue is the economy. Notice how the stock market tends to lead the economy, both to the upside and or to the downside, because we're speculating to the future of the economy when we trade. So if we want to know, first of all, where are we right now in the market or the economy, we can look to see which sectors are best performing. Because when the market is very, very bearish and at the bottom of the market, you'll start to see people buying technology to consumer discretionary, consumer services, because they're getting ready for the market to rally. So they start buying those companies in those sectors in anticipation that the markets are going to go up. And then during the bull market, you'll see industrials going well and materials and energy, because we need products to continue to produce. And that's where you're seeing the industrials doing well, and materials doing well, and inflation starts to come into play. So you start to see energy coming hot. Then as people are fearful, they run to safety. So then you start, again, you're seeing the market peaking because people are worried about it dropping and going bearish. They start buying consumer staples, healthcare, and utilities. Okay, so that's where markets start to drop. Sorry, this is communication services, not anyway. When utilities are doing well, that's because the interest rates are being cut. And the same thing with financials. They do well because interest rates are getting cut because the economy is getting ready to slow down. And then finally, real estate does well when there's low interest rates and the market's getting ready to recover. So there's a little more to this. I'm oversimplifying a little bit, but overall, if I want to know where the markets are right now, we can go to right here and go to the last 6 months. You don't want to look anything less than 6 months typically. So looking at this map right now, be careful. This is how the markets are performing in relationship to the S&P 500. If you take out the S&P 500, it can make it totally different. For instance, let me go back. How far does it go now? It's losing the beginning of the bear market, but you can see December 2007, the market bottomed out, by the way, obviously, if you were paying attention, in March of 2009. So when you do this, keeping in the S&P 500, you can see if the market was bearish, the best performing sector should have been consumer staples, healthcare, and utilities. during the bear market of 2008. 2008, best performing sectors, staples, healthcare, utilities, with the one exception of real estate at the end there. So that's what a market looks like when it's in bear market. Now, don't think that you could have made money on these sectors. That's why I say you got to be careful. That's how they perform compared to the S&P 500. Taking out the index, all the sectors went down. These three were just not as bad. Okay, so that's why you got to be careful. Now, going into current time. Oh, what did I do there? Sorry. Going to current time in the last 6 months. Wow, we have inflation and a flight to safety. Okay, as you can see, if I go back even a little bit more, it kind of fluctuates around, but really, I definitely want the last 6 months. But normally, you'll see if the markets are somewhat bearish, you're going to see investments in consumer staples, healthcare, and utilities. Okay, so if I know that those are the sectors that are likely to best perform, I can also get an idea which ones are the worst performers potentially. Okay, so bear with me here. We know now that, actually, let me do this. Bring up a Word document here. So I'm going to kind of put together my analysis that I'm doing right here. Okay, so we know based on sector rotation, what we're seeing is bear market and flight to safety. Yeah, that's what we're actually seeing in that picture. How do I know? Well, we're seeing in the last 6 months, energy is really high, but also the defensive sectors. Remember, the best performing sectors are here. That means that we're right here in the market move, which, by the way, means we still have room to go. We're not done. If we started seeing financials and real estate outperforming, we're not. That would tell us we're near the bottom. So by these markets performing, it's telling us that we're anywhere in this area. Actually, yep, because right there, where consumer staples and materials end, that's where we are, somewhere in here in a bear market. And the economy just went into recession officially as well. So we can confirm that. You can even break this down over the last week or so just to kind of see what's performing well. But it's best when you look at the last 6 months. So we know the last 6 months, that's what's going on now. If I go back to MRCI and look at the NASDAQ, because I still have it up, we can see that in late August, actually, we should see a little bit of a rally here, potentially. And I can also look at the S&P 500 as well. Actually, I'll do that under this one, Season X. And we'll do last, I'll use 10 years. It's fine. Doesn't matter. So where are we here? End of August. And let's say we're looking at about the next month. Overall, the market's relatively flat. It's only 60% winners, so it's half and half for the most part. So, okay, we know that there's a bearish market, flight to safety, possible recession, imminent. Can't spell. And I don't know, soon. There you go. Possible recession soon, if not already. I mean, technically, we're in a recession. We had 2 quarters of negative GDP growth. And if you don't believe me, look it up. Take a look at trading economics. Yeah, let's see. It's up there. It is. GDP negative growth. Quarter over quarter. And you can actually check. It's been a couple quarters of negative GDP growth. Anyway. So we got a recession going. We know that things are a bit bearish. Okay, well, what sectors should be performing well? If we want to buy these performing sectors, right? So we see that, we're maybe somewhere in here, we should be focusing on healthcare and utilities to buy. For the short side, we should probably be in technology or even communication services. Those are the ones that don't perform well during this time. Okay, great. Let's go back and find out what we should buy. If I go to my screener now, okay, again, we can do just the next 5 to 30 days, that we'll use today. And I'm going to go into sectors, healthcare, and make sure we go for high probability, 8% or better. And now I have some candidates, don't I? Insight, Illumina, Teleflex, HCA, all of these are possible buy opportunities. I'll use this one, DHR. Okay. So we got 80% winners over the last 15 years, or sorry, 10 years. Actually, let's narrow this down a little bit more. Okay, I want to get the best of the best. So I'm going to go, whoops, last 15 years, see what kind of consistency we have. There we go. DHR is still there. Okay, so we're good. So DHR should rise 80% of the time. It's gone almost 4% to the upside. So I just go to my chart. And looking at DHR, I could look at a daily time frame or whatever. On the daily time frame, let's see. Actually, weekly, and we don't really have much of a demand here, but it looks like I was doing some analysis on this one already. I think this is one of my videos I did. Yep. And I said, this was in my video last week. As a matter of fact, I forgot. For healthcare, there are two possibilities for entry. The better one's probably the lower zone right here, the little basing and rally. There was also this basing and rally. And look at that. We were able to possibly buy yesterday as it came into the buy zone. There's a stop loss below it. And there's target one, my next supply. I don't know if I have another target. I don't. But for seasonal move, that's how I identified that trade opportunity, because that's the sector that should be outperforming the markets during a bear market. And this is one of the stocks that seasonally moves up 80% of the time. How cool is that? I can also look again at the bearish side. So we go to sectors, communication services, we know should be somewhat bearish. And we should look for the downside, not up. Well, nothing's there. Let's see if I go a little bit more lax. Nope. Use the last 10 years. There we go. And again, well, we'll go to 80%. Over the last 10 years, Discovery and AT&T have been bearish. So let's take a look at Discovery. You can see it's gone down 80% of the time with a drop about almost 2%, 1.83%. So we now go to Discovery. Oops, wrong one. That was a symbol. Discovery, D-I-S-C-K. Yes. D-I-S-C-K. Huh, Discovery. I already did the Qs. I did the NASDAQ. There we go. Discovery Inc. Oh, it's D-I-S-C-A in this. Well, no, it's the wrong market. Hang on. Got to find the right market. That's weird. Warner Brothers, Discovery Inc. Oh, they merge maybe? I don't know. So that might not be good. Let's do AT&T. That's easier. Okay. So AT&T, this should be a shorting opportunity, right? And I can go ahead and look at this from the daily or even weekly, or even narrow it down to smaller time frame. Let's see, what's the time frame for the trade? August 19th to the 8th of September. So maybe we look at a 4-hour chart. You can see on the bigger picture here, we are drifting down. There's not really any kind of demand to hold us up. So if I go into the smaller time frame, there might be some shorting opportunities. I think we already missed one. There was a little bit of supply right here. Drop, base, drop. You can see it hit that and started moving down. So we missed it. But there may be some new opportunities coming up. Again, I could be a little flexible with this, but knowing the sector rotation, we have communication services, industrials. Let's check out industrials. It's another sector that's likely to drop. So again, I do my scanner. I go to industrials. And we've got 90% for PNR. Okay. So PNR drops 90% of the time. It shows the winning side. So it's only 10% for the winners, 90% to the downside, obviously. Oh, 2.75% down over the last 10 years. So PNR and it just started dropping now on the 4-hour time frame. So I'm not sure if we missed the opportunity. Look at that. It was right up. That's probably daily supply, isn't it? Kind of rally, base, drop, daily supply is what we hit. And we had a negative divergence. So we're off a little bit. Again, I just missed it. I'm not going to chase this. What you can see is we came into that zone. Prices were trying to move higher, but the momentum just was not there. And it dropped. Well, was that predictable? Yeah, of course it was predictable. We're in a bearish sector based on the rotation. Industrials, we're over here. We should not be seeing industrials performing well. And sure enough, they're not. They're a little positive, but not much. Materials might have been better. And seasonally, 90% of the time, Pentair drops during this time of year. So that's how we can use sector rotation and the seasonal moves to find higher probability opportunities. Again, as I was saying, I can go to materials here. Oops, sorry, materials. No, it's not on there. Interesting. Okay. So, I don't know any other way of looking at it there. It was interesting. They don't have all the, that's the one they're missing for the sectors. Anyway, but I can check to see, like I said, different sectors and try to find the highest probability opportunities. We can even go into the utilities are bullish. There they are, utilities. And I like more time, although we could just look at the last 5 years too to see things change. And again, look for the high probability. So when it comes to the membership, I had the full membership, the highest one, which is like $900 something a year, but then you get the discount on top of that. I can't remember exactly what you would need for all the different levels. You go subscription. Yeah, I had the business one. See, does it show the different ones? Nope. I don't know. I thought it's, oh, here we go. Subscription trials. Anyway, they talk about the different ones, but yeah, I've got the highest one. But it's up to you, whatever you need. It shows you somewhere in here what you get with each level. Oh, there we go. Biggest difference. Yeah, I basically get everything. But, I pay for it. But if you use it, it's great. If you're not using it, again, you can rely on me in a way, because if you subscribe to the services that I provide, E-mini Think Tank or Wealth Builders, Wealth with Spreads, I actually give you a lot of the information. It doesn't really have a lot of relevance for SPX alerts, no. The reason why is that's more of an intraday opportunity, so it's not going to help us out at all. Again, this is more for swing trading than it is for anything else. And for Brenda, here's your Qs. Take a look at the NASDAQ, QQQ. Seasonal move right now. Looks like we're coming off the bullishness and going sideways here. Still a little bit of bullish activity. Now from the 18th, it looks like it rallies up. Well, there's a little dip here for the next week. As you can see, be careful. It's only 60% to the upside. So that it doesn't look very good. Just like the NASDAQ was kind of choppy, it didn't look very good. The best time to buy is going to be maybe Tuesday or Wednesday of next week. As you can see, to the beginning of September, 80% of the time, the NASDAQ moves up about 1.75%. So you got to be patient and wait for the prices to pull back. Again, like the 24th is what I've got marked at it. So if I go to QQQ, seasonally, we know this is likely to decline until the 24th or 25th. So Wednesday or Thursday, well, you look at the chart and there's not really a great zone here. Maybe this 315 and a quarter, you wait for it to pull back to buy, and timing wise should be midweek. We just had a negative divergence here. And that's why, one of the reasons why we're moving down, we lost momentum on our second peak. Negative divergence causes a bit of a pullback. That's what you're seeing right there. So wait to buy on the pullback. Well, if I go down to 240, let's see if there's anywhere else. The gap fill might happen. Right there. That's another drop base, and then the gap and rally. So we try to fine tune this in different time frames. But yeah, I would wait to buy until we hit one of those, probably 240 demand right there, the gap fill. So if you can time the hit on about 317.71 with Wednesday, that's the seasonal window, then you got a higher probability of prices moving up. The charts always take precedence though over anything else. So let's see, where was it here? Kind of reviewing here. Going back, there we go. And actually what I should do is copy this. Put it there. I can. Yep, perfect. Oops. All right, there we go. So kind of in review, what we covered so far today, seasonality is identifying regularly happening patterns in the markets over periods of time. The same thing happens over and over and over again. So it's likely to keep happening. Now, the regularly occurring movements or patterns in price action. That's what seasonality is. And now it's asking me for the beginning, the full, whatever. All right, Grammarly is very particular apparently here. So there we go. Clean that up a little bit for the notes. So the seasonality can give us ideas of what to trade and when to trade it. Oops. Let's just say identifies. You still got to use the charts to time your entries and exits, no matter what. But seasonality can give you a little bit more of an odds enhancement to get you an idea as to what you might want to start looking at. And excuse me, and you can use it for pretty much everything, as you saw. I use it for currencies. I can use it for stocks. I can use it for commodities. I prefer to use it heavily for identifying spread trade opportunities because actually I forgot to point that out. Take a look at MRCI here real quick. If I go back to MRCI online and trade ideas, I just want to show you a big difference. This is one of the reasons why I like spreads over seasonal trading. I'll go to again last month. And yeah, every once in a while, you're going to get a really, really high probability trade, seasonal trades for July, for instance. These are just single securities, buying them or selling them based on the seasonal moves. And you take a look at the numbers, 87%, 93%. That one's 100, but that's the only one. The rest are 87, 80, so it's kind of all over the place. But then you take a look at the seasonal spreads for the same period. Okay. And notice 1, 2, 3 100%ers, bunch of 93%ers. The odds are much higher on seasonal trades than they are on directional trades. It's one of the reasons why I like to focus on spread trading rather than just the seasonal directional trades, higher probabilities. So to take advantage of seasonality, can identify individuals, or you could trade individual securities or use seasonal spread trading for higher probability. That gives you a much better probability for success. Okay, there you can do a screenshot there if you'd like, the definitions. And then the sector rotation typically applies only to the stock market. There might be some commodities you could try to trade using sector rotation as well. But for the most part, that stock market leads the economy, and it gives you an idea of what sectors are going to be performing well during certain market conditions or the economic status. Basically, are we in recession or are we in expansion? Okay. So are there any other questions? I gave you some links of things, some resources you can use, or like I said, I would love to have you join me in the Wealth with Spreads program where I do most of the analysis for you and basically spoon feed you the trade ideas. It's kind of neat where you don't have to do much about it and you get to learn through immersion, practice and practice. Just shows you why the spread alerts are outstanding. Yeah, thank you. They work pretty well. If I go into Excel, I got my tracking as I've done before. I track pretty much every month the Wealth with Spreads trades. So, I need to know how I'm performing, right? There's a lot of work I do. Yeah. You can see that I put out, what do we have here? 18 trades, 18 winners, 9 losers, 7 never hit entry yet. The key thing is you'll see my win rate is much higher typically on wealth with spreads than it is on the directional trading. This was actually a low month for me, that 2/3 win rate, but I keep the win size much higher than the losses, so we're okay for the month. As far as the way the trades go, if you take a look over here, you'll see mostly daily or 4-hour charts. And yeah, I'm just looking for trade opportunities based on those seasonal windows for the most part. Some of these are based on other things. May, yeah, that was the win rate for May. And then let's see, here's the next month. Is this July or June? Oh, this is July. July was 29,000. Okay. Yeah, so I have high win rate. Again, 81% wins because we're doing spreads or high probability trade opportunities. So that's part of the program. Yeah, if you want to do the screenshot of that again, go for it. Well, thank you, John. Yeah, talk to you soon, hopefully again. But yeah, the probabilities are much higher again on the spread trades than they are seasonal directional. So that's why I take more of those types of trades. But it's possible to use both, whatever works best for you. Just got to make sure you know how to interpret the data properly and follow along with it. So I'd be more than happy to show you more of that. If you got any more questions, let me know. If not, you can also contact us at support@wealthbuildershq.com. I'll give you that email address there as well. And of course, you got the link if you'd like to join me in the Wealth Builders program with wealth and spreads. If you do the quarterly subscription, by the way, there's a 2-week free trial going for that. So you can try it out, see if you like it for free. If it's not for you, then no harm, no foul. You at least got to try it out. Okay. There's a platform preferred. Well, it depends. For seasonal spreads, I like to use Trade Pro Futures for the broker because they can actually give you the margin right away. Some brokers won't give you the margin right away. And one of the huge advantages you saw on the trade ideas, the big advantage of doing a lot of these is, come on, why is it not going? You get a big margin discount. So if we take a look at the margins on some of these, holding overnight for some securities is pretty expensive, but doing a spread can be cheaper. Holding overnight for lean hogs, $1,100. Some of these are bigger, $5,500 for corn. Some of them can be very, very cheap. You look right here, you can hold live cattle and lean hogs, $962.50, or nat gas. You can hold that overnight for $275. So it's very beneficial as long as you get the right margins. Some of the brokers don't give you that margin discount right away. So you want to use one that does that. And what you can also do then is go into a program like TradingView, and I can actually chart these in TradingView, or even another program I have is called a Mega Charts. So I can chart spreads right there. Dow versus the 10-year treasuries. That's a spread chart. But I can link my account to the Trade Pro if I need to or want to. And again, right here, these are the ones I'm tracking right now. This is Omega Charts, and I've got all these spread trades I'm keeping an eye out for. For instance, let's see, is this one we're in right now? No, that's not it. That one's getting ready to enter. Oh, this one. This is the 30-year treasury versus the 10-year spread. And we're looking at an opportunity here, and you can see that I can chart those out and trade them. Yep. So this is a platform, Omega Charts. You can use whatever broker you want. I prefer to link it to the Trade Pro because that way I get better trading opportunities. Anyway, that's what I got for you guys. I got to get running here. It's been about an hour. So I want to thank everybody for being here, and hopefully you learn more about seasonality and the futures. I'm sorry, not futures, seasonality and sector rotation. If you got more questions, like I said, contact me at Wealth Builders. Love to have you join the program, Wealth with Spreads. We do a lot of that type of trading there and explain it hopefully much better than I even do here, because you can watch it over and over again in the recorded videos just as easily as you can watch it live. So thank you very much, and I will talk to you soon. Trade safe, trade well, everyone. Take care.